I am Jonathan Carter. I'm the founder of CATA Accounting Solutions. We're a born in the cloud firm, kind of partially born in the cloud, mostly born in the cloud firm. I did start on desktop, but very, very quickly moved to online, and we've never had brick and mortar. We, no longer do in-person meetings, things like that. So I was a member of the inaugural Intuit Accountants Council. That was a great experience. Got to meet some amazing people there. Still love Intuit, still like to work with them when the opportunity presents. I received the 2018 Inspire Accountant Award for contributions to the future of the industry. We are Elite Pro Advisors, QBO Advanced Certified, and Insightful Accountant 2021 and 2022 Top 100 Pro Advisor list. We do work with a lot of bookkeeping firms, and we really enjoy working with bookkeeping firms. We were just talking this morning about developing an impact statement and just developing a different kind of report for our team to see how many jobs they've helped support, how much revenue they've helped support, how many business owners they've helped support, to really help them understand the difference that they're making in people's lives. And we were talking about how, a good bookkeeper can be an absolute hero to a business owner. The main reason we like working with cloud bookkeeping firms is because they give us good stuff to work with, not just their own files, but the files of their clients are generally very, very well done. I'd like to consider myself a thought leader in technology and accounting. I have become slower to adapt new technologies just because I've been burned a few times, and our app stack did get out of control at one point in time. And I really like to work with forward-looking companies, tech companies that are pushing the envelope in different ways. So it's a little bit about me. So today's presentation is a revisit, and I think it's a timely revisit of the difference between financial information, financial statements, and the different kinds of assurance work. So Leanne, have you set it so that panelists can answer the poll questions? Awesome. So just go through the agenda real quick. We're going to go through the difference between financial information and financial statements. We're going to talk about what is assurance and what does your client need. And we're going to talk about ways you can help identify that need and ensure your client understands what they need, why they need it, perhaps the implications of an agreement you've been asked to look over, things along those lines. We did recently have a long-term client who really ought to have known, but I mean, we preach communication and we understand we're not great at it, but we really try. Who essentially, they need compiled financials and he requested an audit. And I was like, we can't do audit. So who's going to do this? He's like, oh, no, that's just a mistake. We had to walk it back and walk through part of this presentation, help him understand what he needed. So
are you ready for that first poll? Here we go.
Poll question number one.
Okay, everybody should be able to answer. I'm not seeing anything. So, oh, there we go. Okay.
I think I just did that on my shared screen and told everybody.
Okay, we're almost there. Perfect. Okay, we'll hit that and share those results. There you go, Jonathan.
Excellent. Most people got it right. Compiled financial statements provide zero assurance. As we'll get into it, the biggest difference between the notice to reader and the compiled financial statements is the number of times we tell the business owner we are not doing an audit or review. There's no assurance here. We're essentially getting a basic understanding of what's going on, how you handle your accounting, and we're taking your numbers and we're creating a financial statement. It is more involved than the old NTR, but it is still zero assurance. So, all right, let's hop into it. And okay, so first of all, financial information. Financial information is really a CPA terminology. CRA, I've heard use it as well. It really is all the underlying records. So, your QuickBooks Online account, that is financial information. The books that you are keeping, That is the key financial information. The actual paper can be, if it's received in paper, the original document for bills and receipts. So if you're receiving that by email, that is your original document, that email. One of our colleagues suggested that if you're using a technology like Dext or QBO receipt capture or HubDoc, you can have the vendor send documents directly to that platform, and then that receipt on that platform now becomes the original document. So it's kind of interesting how that's evolved with advances in the cloud side. The sales receipts and sales invoices are also part of the financial information. And this can become particularly important when your client is doing stuff outside of the bookkeeping system. So for instance, if your client is sending invoices on PayPal, those invoices from PayPal are the original document. Those are part of the key financial information of the company. Could also be things that you might not think about every day. You know, a lease agreement for a rental space, a lease agreement for a vehicle, you know, key sales contracts or service agreements, shareholder agreements. That's one place where we often see small businesses deficient. Employment contracts, those can govern what your employees can expect to be recompensed for if they're incurring expenses on behalf of the company. And that can become one of the supporting documents for expense reports. So that's kind of an unusual thing that people don't really think about. And quite often we do see people with employees with no employment contracts. We do not think that. We do not advise that. We strongly recommend, like, even if it's a Law Depot template or some kind of thing that you've gotten from a supporting organization, it's important to have those employment contracts. And then, of course, there's all the other stuff, right? The supporting spreadsheet for determining pricing, you know, the balance sheet that you pull out of QuickBooks. It's not considered a financial statement. It's financial information. So does anybody have any other things they'd like to add to this list, or any questions about anything that we're talking about on this list? Okay, we'll go on to the next slide. So the corporate record book, I'm sure you all have heard me preach this before. This is the area where we see the vast majority of businesses deficient. And a lot of the time it's like, it's stupid. Why am I going to have a shareholder meeting by myself and create minutes? Well, because it's a legal obligation. You're legally required to do that. And I think that's part of what's happened with the new accounting standard for compiled financial statements, is that it's really trying to explain to the business owner, to the directors and managers of the corporation, if it is a corporation, their legal requirements with regards to, you know, who is responsible for the books and records of the business. So long story short, the corporate record book, you got your incorporation, certificate of incorporation, articles, bylaws, those key agreements, the shareholder agreements, key employment contracts, major leases or sales service agreements, things like that. Securities register, that's something we get all the time. It's like, so who owns the business? Well, I do. Okay, prove it. Do you have anything that supports that you own the business? Because that is part of that corporate record book, and that is very important information. And really, I mean, it's something that goes overlooked all the time, but it is something that, you know, it can be anywhere from I'm hiring a Bay Street law firm to do it to, you know, I pulled this off the interwebs and I'm editing it for my use. I've seen all kinds of different things, but the important thing is that it's being done. Okay. Any questions about the corporate record book? Does everybody have a corporate record book? I'm seeing some nods, some hands. Yeah. Okay. Excellent. Excellent.
And feel free to like unmute
Yeah.
and introduce guys, like absolutely jump in there.
Absolutely. All right. So the summary of all this stuff is your corporate, this is your financial information. It may seem weird that the corporate record book is a part of it, but the corporate record book will support who owns the corporation. It will support key liabilities or commitments, such as lease agreements, It may have liabilities such as a loan from like a BDC or some kind of government funding or even a private investor. It could contain things like between the shareholder and the corporation, shareholder loan. I'm sure nobody here has ever seen a shareholder loan on a balance sheet. So, it's important that that be documented, not only as a minute, but that there be a promissory note or some kind of understanding there, written out, spelled out, that can be supported if something ever goes to court about this. When dividends are declared, there should be a minute about that dividend. So this is part of your supporting financial information. Of course, I'm not a lawyer. This should not be considered legal advice, but let's start encouraging clients to get in that direction and make sure that they're at least making that effort to be compliant. So who uses the financial information? Well, we do, like accountants and bookkeepers. We use it every day. We get those OCR captures in Dext or in HubDoc or QBO receipt capture. The CRA is going to use it when they come to review. There could be employees who are doing things such as expense reports or, creating, analyzing data to understand certain performances, things like that. If anybody's ever used KPIs, it's commonly used by ownership and management to help understand how the company is doing. I think the most important part about financial information, the most important reason that it should be kept up to date on a regular basis is it allows the management and the ownership of the company to understand what's happening in near real time. It's not going to be in real time. Never will be 100% real time, but it can help them decide and make decisions, understand their options, evaluate their options, and pivot if they have to. I think that companies who had up-to-date books and records going into the pandemic, who maintained that and were able to make decisions and pivot quickly, I think those companies fared far better than those who didn't. I have only anecdotal evidence, no data to back that up. So there are, of course, other parties that could be using this, such as, does anybody have daycares? Nobody works with the daycares? Okay, well, that's going to be a fun one. The CW. Oh, yes, Jennifer, you're on mute.
Yeah, we have one daycare.
So how is financial information used by third parties with the daycare?
Oh, yeah. The third party known as the Alberta government has their hands all in it because not only do they subsidize the parents, they subsidize the employees. Thankfully, my client actually does all of that and gives it to me afterwards, but I have to balance it and make sure that. But
yeah,
she reports to them quite often.
Yeah, the good thing about licensed daycares who do receive government funding is they tend to be really up to date on their stuff. They want to get paid by their customers. They have to pay their staff. Their margins are not thick at all. They're very thin margins. And they have to report, and they have to report sometimes at odd periods of time, despite when their fiscal year end is. So for instance, I don't know, Jennifer, if you are experiencing similar in Alberta as we do in Ontario, but we have to have an audit completed. We don't audit, we work with a third party for that, who has a separate engagement, but we'll prepare the taxes, we'll prepare the compiled financials from which the auditor will produce the audited financial statements and the report for the government. But it's due at month 4 after the fiscal year end, not at month 6. It's due on the government schedule, not on the CRA schedule. So, Jennifer, what's your experience like out there?
Well, she's new. This is her. I do believe that the first year we did her financial, she wasn't actually open yet. So I think this is her first year open. And to the best of my knowledge, we haven't heard anything about a government audit. So, but we will. What was her year end? January. So yeah, we're only not even finished month 1. So we'll make sure it's audit ready when it comes, if it does get asked, for sure.
It's interesting too, because the education is managed by the provinces. So every province is going to be a little bit different in what they need, what they request. And I don't know if you experience the same thing here, but even regional governments can get involved. right? So
Yeah.
it's not necessarily just the provincial government who's looking at this financial information.
I know that she has to put in for the employees and for the parents, but that's all I know.
Yeah. Well, with the CWELCC, there are, now I can't even, Canada-wide early learning childhood credit, I can't remember what the CC stands for, but I think it's Canada-wide early learning childhood something. That with that happening, there are going to be more daycares seeking help. From our perspective, we're not going to be working with people outside of Ontario because we're still getting used to Ontario. And since the program was announced, at least in Ontario, the rules have changed 3 times. There are some discussions and concerns about the limits to profitability from the key function of childcare. So these are some things that have to be monitored and have to be tracked. But then you can use that financial information to help find alternative revenue streams as well, right? Late pickup fees, field trips, all kinds of different expansions on the basic childcare that will be $10 a day. So to give you an idea, I'm just going to talk about another quick situation, and I might draw somebody into this if I don't get volunteers, and that is potential investors, lenders, or grant awards. So those kinds of individuals or those kinds of organizations, can come and perform due diligence on the company's books and understand what is the supporting financial information. Is this a credit-worthy borrower, or is this a company that I want to invest in, or is this an organization deserving of this grant money? Now, I'm sure with all the women on here, we must have had somebody who has some experience with Startup Canada, Women's Entrepreneurship Fund, or BDC. Does anybody want to talk about their experiences at all? Yeah, go on.
So we just had a client purchase a building through BDC, and
Excellent.
yeah, it was quite daunting what they wanted. He's only been in his first year as a sole prop. They wanted a 2-year
Business plan?
forecast
Yeah.
by month. So it was fun to go, okay, let's see what we think you're going to be doing. We think your growth is going to go up. And then of course it was like, okay, I've done this, but if I have a building, I can do this much more. So, but they were happy with the numbers, so it worked.
That's excellent. And that's a great investment. I mean, real estate, never a really bad one. And I know I've worked with BDC before to help support clients get lending. And, generally speaking, they're pretty fair, but quite often they want to see that business plan. That's another piece of financial information that can be done. We use Live Plan. What did you use, Jennifer?
I just did an Excel sheet and a percentage. Yeah, because I'm not even though we took that back in school 20 years ago, I don't do that very often.
Yeah.
But and a lot of it was just based on him, because he started this essentially backyard mechanic shop. And it just quickly grew out of his garage and wanted to buy this building, and he was getting it for a great deal. So it was kind of a time crunch, and it almost like they wanted the reports, but they didn't need them to say anything in particular. They just wanted to see the reports, which I guess is just a way of knowing that he was actually looking at it and what it was going to be. And he has to incorporate. So we had to kind of, okay, if you're incorporated now, this is going to be different because now we're going to add your salary in and all that sort of stuff. But yeah, no, it worked.
Yeah. Sometimes I swear they're just checking a box.
Yeah. We're doing a review for sale right now. And the buyer has some concerns, so we're focusing on those, but we get a lot of questions from grantors and investors and all sorts of things.
Yeah.
But their requirements are usually quite unique.
Mm-hmm. And sometimes, and I'm going to preach communication all day long. It's important to have that level of trust where the client comes to you well before they need it, not when they need it that day. And
Yes.
we've had that happen, especially early on in our experience. It's like, okay, we need financial statements as of this date today. And it's like, yeah, just not happening. Just clear that idea out of your head. It's just not happening. So sometimes, you have to disappoint, but people have to be realistic in their expectations. And like you said, sometimes it's super unique. It's super unique, right? So we recently had one with BDC where the client had to write out a use case for the asset that they were trying to purchase, that they were borrowing in order to purchase. And it was an interesting exercise, because it was like something that they could hire out, but they had an opportunity to buy the vehicle at a particularly good deal. So they wanted to buy instead of lease or rent or contract. Any other thoughts about the use of financial information? Does anybody have any other experiences they'd like to share? Has anyone had to book anything from the corporate record book? Or has anyone ever been asked to provide a corporate record book? Or has anyone ever been provided a corporate record book? Kathy has. I heard a voice. Kathy, would you mind telling us a bit about?
All my NPO clients, right? So they're all not for profit, they're government funded. So right in there with Jennifer and all of the government rules about, oh, let's have this and let's have that, and oh, let's please jump into this and please jump into that. But even my smaller clients that are incorporated, like you're right, the record book is not something that ever strikes them as something they need to do. And it's like, we're issuing dividends at every year end. Please, let's document that. Yes, I know it's just between you and the other shareholders, but really looking at helping them understand what it is and what they're doing. So I have one client right now who's in the process of deciding she's going to roll up. And it's over what period of time is she going to roll up, and what assets are they going to be selling? And, what is the impact of capital gains on what they're doing between what they own, what the corporation owns, and really helping them understand what it is that they're doing, and really being able to do that so that they understand that this is the impact of what you're doing, right? I can only help you so far, and then we need to talk to the tax experts, right? Because I'm far from a tax expert, and helping them understand that, but it's the trust they put in you.
Yeah.
Right. Like, my clients come to me and say, well, if we're going to talk to somebody else, you better be there. Right. Because they're like, A, I may not understand what they're saying. And B, I don't necessarily trust what's going to come out of the conversation. Right. But it is helping your clients understand the financials that they have. Right. We are not just individuals who sit in the kitchen at a table doing books because we can balance a checkbook, right? But it's understanding what all those records are and why they're important. And a lot of small business owners don't understand why they're important. Right?
Yeah.
Why do we need all of this, as you said, Jonathan, financial information that they don't even really look at it that way?
Yeah. And helping them understand their legal obligations and their responsibilities. Because in the end, like, garbage in, garbage out, if we're not getting the information, right? Salima?
I do a lot of updating the minute book and the record books with my clients when it comes to especially consultants. They have incorporated, but it's just basically a one-person shop. It's low volume, high value every year, and there is a lot of financial moving of funds. And we need it for the CRA and I always tell them, just think of it every year, do it at the year end every year as a conversation to the CRA. How will you explain your actions to the CRA every year? Say every year the CRA comes to you and says, okay, explain to us exactly what happened. This is your conversation with the CRA. So that when the CRA will eventually ask this question, you have the answers there. And it's especially when it comes to clients who have a lot of funds, because so they don't necessarily pay themselves wages much more. A lot of the money is left in the company. Sometimes they will move their own personal investments into the business, so that they get the a tax break when they eventually get the money out. It's a, it's all showing I'm lending the company $250,000, so it has to show as a loan, and then the company invests that money is eventually repaid. So every year there's a lot of funds being moved around, and I'm saying, well, every year, like, write this letter to the CRA so that you clearly say, and we do it as a letter, and then I do the actual individual, okay, this is a loan agreement, this is a dividend agreement, this is the minutes of we agreed to give dividends, we've agreed to take a loan. So we write the letter, and then we attach I staple it together, all the actual stuff that's actually meant to be in the book, and then we start the next year.
That is
And it's easy for
fantastic.
them to understand.
Do you mind if I use that phrase?
Oh, no, absolutely.
That's fantastic. I really like the way that you put that together. Now let's talk for a quick second, just before we get too deep onto it. I mean, we're not lawyers, right? Doing these simple agreements, simple agreements are really not that hard. You can probably find dozens and maybe hundreds of examples online for them, like a share subscription or a director's consent or things like that. Those can be really promissory notes. Those things can be really easy. But we need to know when we need to start speaking with a tax specialist or a lawyer or things like that. So, I mean, I think this is really good to as an opportunity to help the client understand where our kind of knowledge level ends. And we do that with our clients every year when we're doing these year meetings. Excellent.
Yeah, I have a tax lawyer here in Toronto that helped me draft some templates, because I get the same situation over and again with certain clients. And once I've got these templates drafted, so I use them. But anything beyond that, it goes straight to the lawyer, and then the lawyer will come back and say, okay, this paperwork needs to be done and this needs to be done. Sometimes the CRA filings need to be done. I've had some things that are so complicated. I'm like, I'm not even dealing with this. It's like, just talk to the lawyer and then come back to me.
Yeah. And sometimes it's important to say that.
Just move money and they don't think about it.
Yeah.
And it's like, well, I had this shares in a TFSA and I wanted to move to the corporate, so I moved it. And I'm like, there are tax consequences because the CRA now think you've sold those shares.
Yeah.
And there are tax consequences to doing it. It's not simple like I moved it to one to the other, even though you 100% own the corporation and they're your shares. And people don't realize the tax consequences of what they do.
Yeah, quite frequently. Karen, you looked like you wanted to chime in there. You're on mute though.
Yeah, I got to find the mute button. Celine, that's brilliant. Absolutely brilliant. I love that focus on what if you have to explain to the CRA. And with your permission, I'm going to adopt that as well too. But yeah, the moving of money, I hear you, because people don't understand that their corporations and themselves are two different entities, two different people. And as soon as you move it from one to the other, it's a sale. And it's a constant battle, because it's as if I'm the one giving them the hard time. No, it's the CRA that's going to give you the hard time if you don't get your documents in place. That's a constant battle too.
Yeah.
Does anybody else have that same thing, that you're becoming the bad guy?
Oh God,
All
yeah.
the
I
time.
did a tax return last year and a client moved funds from personal to corporate. And even though they were 100% shareholder, and the tax bill was like $45,000 and they
Ouch.
hit the roof. And then you can fix that, because then what you do is you've not moved it. You've got more shares. You have to issue shares. There's ways to get around it, but obviously that's tax lawyer level, not my level. But giving them the initial tax return, that was fun.
Yeah. I bet.
Yeah, I have a very good friend who's a tax lawyer too. Some of the stories of what the CRA can do are rather epic.
I mean, I think a big part of our job is just helping the client stay off the radar.
Exactly.
And, one tactic that I've used, and it's definitely gotten a reaction, but I would not advocate for this tactic, is sticker shock, right? So like, it's like, oh, you have a shareholder loan here. Okay. So you have a shareholder loan in this company too. Oh, okay. And you have a shareholder loan in this company too. Okay. So here's what you're looking at personal tax time. and they're like, what? And freak out. And of course, oh, you've done something wrong. And then they have to start looking at it. But it is a good way to help them change behavior. I'm a big believer that it's never in the client's interest to pay more fees. So why are they paying us to do personal bookkeeping in a corporation? It's all going to shareholder loan anyway. It's just, it doesn't make good business sense. Anyway, we should move on. But I'm loving this conversation. Let's keep it going. So financial statements are the set of documents that provide the summary presentation of the company or organization. They have to contain sufficient information to fairly and materially present the performance and position of the company. And they're generally for third parties, right? We used to do notice to readers, and it would just be for management to understand, well, what's the point in somebody paying for that work when they can look at QuickBooks and see their balance sheet, right? As long as the books are locked, I mean, the information is going to be materially the same, won't be grouped up the same as it would be on financial statements. But that's something that's like, it just never made sense to me. Now, companies are required to produce financial statements annually, but that line has been changing, right? That's been evolving a bit. And I would, if there is a concern about that, I would have that client speak to their lawyer about what that entails. Because under the new rules of CSRS 4200, yes, that was the little Accountanese, we need to know those things. Oh, I'm going to go back one. We need to know, who is this going to? Is this going to regulators, investors, lenders? Is it even captured by this new standard of CSRS 4200, right? That's the first kind of conversation. The first thing we need to know is, who's the audience of those financial statements. It's no longer we're just producing NTR, slapping a letter on it, no notes, here you go, good luck, right? We got to do a bit more. So the financial statements now should contain accountant's letter, balance sheet, income statement, cash flow statement, and the notes to the financial statements. There's two methods of the cash flow statement. I'm not going to get into it. I'm sure everybody at least has been introduced to them, if not knows them inside, outside, and backwards, and either is acceptable. But the key difference now is the notes to financial statements. Those are always required, because as a part of this new standard, there's a specific note about the basis of accounting that's required. So these financial statements are always relied on by third parties to make decisions. So there is liability in there. If you are materially misrepresenting something, there could be liability. Depending on the needs, different levels of assurance could be required. So for instance, Kathy, I'm sure, is, with all her NPO clients, deals with more than one audit a year, I'm guessing. Because over, she's just like, oh yeah. Over, what is it, $1 million, I believe, that every of revenue, they have to have an audit. And of course, this type of assurance work is just testing. It's just like, okay, I'm going to look at 1 in 20 transactions to make sure it's booked correctly and flow it through the whole system. I'm going to ask the bookkeeper this question. I'm going to ask the salesperson this question. I'm going to ask the manager this question and see if we get different answers, right? So those are some of the things that you might see when you're actually dealing with assurance. Of course, assurance work has to be done by a licensed professional accountant. That would be reviewed or audited financial statements. We are not an LPA firm, so the highest level we do is no assurance to compile financial statements. So I've talked about this briefly. Any questions, concerns, commentary about the different levels of financial statements, assurance work, things like that? Seeing some shaking heads. Okay, let's keep going. So I'm going to talk about this for a moment. We have seen, and CRA actually put out a bulletin about it, people not adhering to the new standard. So there are accountants out there who just, they're in it for the money, and I'm just going to spit out whatever you give me into a tax return, into financial statements. They don't really pay attention to the regulations. Maybe they're an unregistered firm and they shouldn't be doing this work at all under the CPA guidelines. But I mean, this is the reality of it. We do see it from time to time. So just to be clear, every fiscal year and after December 14, 2021 needs to be, is subject to this new standard. Every single one. So if you got December 31st, 2021 notice to reader statements, from an accountant that accountant is not following the standard, and they probably need to update their language and the way that they're flowing through their process. So a few nice things. Does not apply if you're engaged to perform bookkeeping services or to prepare a tax return. So that lets a lot of people off the hook right away, right? But at the same time, you shouldn't be creating those statements. It does not apply if they're being audited or reviewed for another firm or by another firm. So in our instance with the daycares, we are, having them audited by another firm. So we're kind of doing the draft, and then they're going to do the notes, and they may advise additional adjusting entries. We've only ever had one from them, and that was a judgment call decision that they elected to make, and I was fine with it. And another is that the information is being prepared to report to a government body. So Kathy, it was you who was talking about the daycare, right? Was it you? No. Who was talking about the daycare? It was Jennifer who was talking about the daycare that she has. And, some of that reporting, like in Ontario, we have something called fair reporting. That would not be required under this. So this is a little bit different. Some of the things you will see are additional sign-offs by management, additional explanations that the accountant is not responsible for the underlying financial information. I swear the standard is a lot about we're not liable, we're not liable, we're not liable. It's all your responsibility. And that's a lot of it. There is a mandatory note on the basis of the the basis of accounting used in the financial information system. And this is where we see a lot of challenges. A lot of people say it's ASPE. Well, it has to be proved that it's ASPE. It has to follow that. Does everybody know what ASPE is? Seeing some nods. So ASPE is what GAAP became for private companies. So public companies have to use IFRS, the International Financial Reporting Standards. Private companies in Canada use accounting standards for private enterprises. Think of it as GAAP. It is very, very similar. But you might see people saying that they're using that, but really they're using a blended cash basis. In our experience, that's what most organizations are using. It is not correct. By law, we are required to do accrual-based accounting and bookkeeping for corporations in Canada, but the reality of it is many of them out there are doing a modified cash basis. You might have some AP, some AR, but they're really not paying attention to when the expense, what period the expense belongs to, or the revenue belongs to. They're just paying attention to the cash flows. So any questions about this before I move on? All right. So the big thing is anything after December 31st or December 14th, 2021, compiled financial statements, we need to know who the audience is. They're going to be used by a third party, and it always has to be accompanied by that letter, which is more detailed. And that also includes a very specific description about that note that I mentioned in the financials. That will be part of the financial statements. So the big difference is, I think I kind of covered a lot of this. More conversations between management and the accountant to make very, very clear who's responsible for the underlying financial information. A better understanding of the basis of accounting by the accountant. Revised language in the letter, the engagement letter, and additional sign-offs. And notes absolutely must be included with the financial statements. We've added kind of to the first steps in this to ensure that the client is getting what they need, because we've seen this happen before, and I find it extremely frustrating where sometimes a client's like, oh, I need audited financial statements, and they pay for audited financial statements. They don't need audited financial statements, or vice versa, where they're getting compiled financial statements, they're paying for that, and then they're coming back at the 11th hour and go, oh, actually they need to be audited. Well, anybody who's worked with an auditor knows that work does not happen overnight. And if you've waited to the last minute, odds are you're not going to be able to hit any kind of deadline to have those audited financials produced. So the first things that we're asking about are the level of assurance work that they need. So we have to, some of this additional sign-offs, we have to obtain management's acknowledgement of the basis of accounting that is applied to the books and records. And sometimes this is where you guys can really come in and help explain to them how their books and records are being kept. Because the vast majority of business owners I've dealt with don't know the difference between cash basis and accrual basis. And you try and explain to them, they're like, no, the money left in the account, that's when the expense happened. Right. So something to have conversations about. We have to inquire about the intended use of the financial statements, and quite often will deter clients from getting compiled financials if it's just for management. Because if it's just for management, why are you incurring that additional cost? You have access to the financial information of the company. You can pull out way more data out of your QuickBooks Online or whatever platform you're using than you can off of compiled financial statements. There's increased a requirement for us to understand the entity, where they operate, how they operate, things like that. And we have to discuss the significant judgments, if there are any, with which the financial information was compiled into statements. And the management has to sign off on responsibility for the underlying information. So the significant judgments don't necessarily occur every year. And that is something that, you should still discuss what's happening. So we're trying to increase the number of conversations and back and forth we're having with, say, adjusting journal entries and why we're doing them. Now we're doing that more in writing than we are in conversation, but it's just one of the things that we've done. So has anybody encountered this from the other side, like from working with an accountant who's creating compiled financial statements? No. Is everybody still having accountants producing notice to readers? Yeah. Time to start asking some questions, I think. So again, what does the client really need? The different levels are going to require different people to be involved. The bigger the organization, the more people could end up being involved. And this is where I think we can really act as gatekeepers, the agreements level. Right. So I have seen really stupid things in my life. I once had a CEO agree to his board of directors to produce monthly audited financial statements. When we brought them the cost estimate, that ended real fast. That ended really quickly. But then, that evolved into like, we're going to have quarterly management reporting that's provided to the board, and we're going to do annual audited financial statements. Now, they were governed by an organization that did require audited financials annually, but to agree to doing that monthly, that just shows a complete lack of understanding of what an audit is. Yeah. Jennifer, you pop back on. Is there something you wanted to pipe on with, or no? Okay, just said turn the camera back on. So
No,
go on.
just reacted to having monthly audits. I mean, an audit is it takes more than a month to do an audit. Yeah,
it does. I have seen audits done in as little as a week, but I mean, we're talking about crystal clean files, like amazing files, and an auditor with the capacity to take that on in such a short time period. And we did have one. I have seen that happen. We had one that we were able to turn around in 3 weeks with the auditor, but that was because the auditor gave us a letter before we even started into the tax return. And we had everything in folders, everything ready to go. They had one follow-up question, like with regards to like an adjusting journal entry. That was the one I was talking about before. So some areas to keep in mind, investors can have either as a lender or as a shareholder, there can be something in there that can require either additional management reporting or additional actual assurance work, things like that. Grant awards as well. So, different levels of funding from the government, say for instance. So for the daycares in Ontario, it's over a certain amount of funding received. They have to have audited. Below that level, they have to have reviewed. And then like if they're not receiving government funding, they can kind of do what they want to do. But they're not going to be doing $10 a day daycare. I guarantee that. So, all right. Any questions about what the client needs, or has anybody ever found a landmine in an agreement? Are your clients coming to you with the agreements before they're signed? Yeah. Okay. That's great, Kathy. That's great to hear. That shows such a high level of trust. Okay. So some more key considerations: who's the target audience? Are they going to be able to request additional information? So quite often we'll do compiled financials for investors and or for lenders. And that's a very important part of it. You know, will they have access and be able to request additional information from the company? Things like that. Is it a compiled financial statement that a typical account can do? Or is it, you know, reviewed or audited where you need that licensed public accountant? And I would encourage you to find out if you are working with a registered firm. Those can be found out online. So, also registered accountants. I have had a couple people come to me recently like being in 2022 to try and sell their book of business. And like they're not registered firms, they're operating cash under the table and stuff. It's like, I'm not touching that with a 10-foot pole. Like, I mean, I have to ensure that runoff work, and I have no idea because you've not been following this one very, very important rule. What other rules haven't you been following? There's just way too much liability there. So impairment of independence needs to be disclosed. We do compiled financial statements for an organization where I personally hold a very, very small percentage, less than 1% of the parent company, but we disclose it. We're also disclosing if they're a bookkeeping client and are the nature of our relationship there. Don't know if it's really an impairment, but it is something like anything that could be perceived as an impairment needs to be disclosed. So we do disclose it. So yeah, it could also be a family relationship. So I do have a newer customer who is a family member who, if we do compiled financials for them, we're going to have to disclose that we are related. And yeah, pretty much in the compilation report in that letter, it needs to disclose any potential impairment. All right, last poll question. What level of assurance requires a licensed public accountant? Compiled financials. Yeah.
Should be up there now for everyone to answer, and you
Awesome.
should all be able to do that.
I will move this off my shared screen so I don't do that again. So compiled financial statements, reviewed financial statements, notice to readers, or business valuation report, or all of the above. Kathy, that's a really good point. There's a lot of time investment advisors aren't in the loop either. Really ought to be. Really ought to be.
We're almost there. I'll give you guys a couple more seconds. There's a few people who haven't answered. So if you want to get that answered. All right, let's end it there. And there's the results up there for you.
Okay, so there are some different levels. Reviewed financial statements require a licensed public accountant. A business valuation report depends on the level of business valuation report, and there's the certified business valuator that can be required. Notice to reader statements are dead. Just consider them dead. And compiled financial statements can be prepared by any CPA. So reviewed financial statements, that was the key takeaway there. Guess I didn't talk about that point well enough throughout this presentation. It was a good takeaway from me. Carol had a comment in the chat. One thing I have learned is I need to know the structure of the ownership and who owns which percentage of shares. Agreed. Very important. Can usually be found very easily in the corporate record book if there is one that is complete. The securities register should list who owns what, any transactions that have occurred in the securities ledger. So these are some important documents that really I'd like to see more and more organizations have. So just in summary, the differences between financial information and financial statements. We've talked about that quite a bit. Are there any questions about that point? There are no more notice to readers. It's compiled financials from December 14, 2021 forward. Ensure that the client is getting what they need in terms of insurance work. Don't pay for extra and don't underserve them so they end up paying twice. And you know, it's a good idea, especially if your client needs an audit. It's very important to check that public accounting license directory. So, and I'm going to say just to add on here is make sure you're charging for your time. Because if you're going through an audit, it's a lot different than compiled financials. It will be more intense on you and it will take more of your time. So make sure you're charging appropriately. So a good old auditor saying, I see Kathy smiling. I see Karen kind of silly. Everybody's smiling at this one. Trust but verify. So Carol, it looks like you were hopping on to say something and I was looking at my other screen.
Oh, no, I was just gonna say, I still have the client, but when he was a larger client, I would have these meltdowns when things wouldn't go right, and he'd say, trust no one. Verify
Trust no-
everything. And it's not that he wasn't a trusting person, it was just, you have to double check everything. So
There's a legal obligation.
it's just knowing, and for me too is, knowing the role I play as a bookkeeper, accounting, bookkeeping, whatever, but I know where my role stops, and for me, it was a simple thing one time when an HR person was telling people how to fill out their TD1 forms. I said, you're not a tax professional. You can't answer those questions. She goes, well, no, you should be doing it. I said, no, I shouldn't. It's not my job. Well, but
If anything.
I said, no, I don't. I don't know their tax situation. So no, I can't answer those. It's a form that comes from the employee to the employer telling them of their tax situation. That information is coming from their tax advisor.
Yep, agreed. We get actually, that's one of the biggest questions that we've got from some of our posts is, how do I fill out a TD1? And our answer is always pretty much what you say is like, we don't know your situation. We can't tell you how. 100% you're going to probably claim, like 99% of people are claiming that basic personal amount. But what we do see is people forgetting to check that box saying that they have multiple jobs. So that's something that we have been kind of pushing people to do a bit more. Any other comments? Salima, you look like you want to say something.
No, it's just the thing about people not realizing about multiple jobs. The number of, it's less now, but oh my God, the number of times people will come back and say, well, I would do their tax return based on the T4s they sent me, obviously not sending me all their T4s. And this was before we could get the information from the CRA and saying, well, you've done something wrong. I've got this tax bill and I first got a refund. Now I owe them more. And I'm like, well, let me go in and see. And obviously there's more jobs that they have not declared. And I'm like, well, and they go, the CRA knows about this. I'm like, they know everything. The shock, the CRA knows that they have a job.
Yeah, really. Yeah. I'm a big advocate against the cash under the table. It's been definitely an adjustment from moving to the area we're in now. And yeah, it ends some conversations really quickly, but I personally see it as stealing from your neighbors. If you're working cash under the table, you're making the rest of us pay more tax.
Well, not only that, people don't realize if you're getting cash under the table, you're not insured. You're not covered for WCB. You're not covered for anything should something happen to you. Not to say it's going to, but you know what? If it does, you're hooped. You're not going to get EI. You're not covered by WCB if you get hurt. Like people think, oh, it's okay because I'm screwing the government. No, you're screwing yourself. It's not going to cover your CPP when you get old and you want a pension. Oh, why do I get so little? Well, you never paid into it.
Yeah.
I mean, I have clients who were given cash. It wasn't an option. Their employer said, we are paying you cash. We're not declaring this. And we always declare their income. I'm like,
Good.
And they're like, well, I get in trouble. Like, you're not going to get in trouble because you're declaring it on your tax return.
They might.
Your employer will get in trouble, but that's their problem. That's not your problem. But I explain to them that you declare your income, you're fine. It's the people who are not declaring that they're paying you that have the problem.
Yeah.
And as long as we're good, it's all good.
I have seen insufficient documentation result in large assessments to the shareholder for shareholder managed corporations where they were doing exactly that. And it's like, well, you can't prove it. You have no employment agreement. You have no subcontractor agreement. You didn't issue a T-slip. I have no way of, you have no evidence to say that this person worked for you in any capacity. So that's something that, ends up, okay, now you're getting assessed on this for your personal tax. The corporation's getting denied an expense, paying tax on it as well. You're into double taxation. And CRA knows you've been offside, so they're going to probably circle back and look at you again next year and the year after until you get on board. Well, we're getting close to the top of the hour. Any more questions, comments, experiences? I have seen a very, very small loan have a requirement for an audit. We killed that for the client immediately because the loan would barely cover the audit fee. And it was just stupid. It's like, you do not need audited financials for a $12,000 loan. It's just silly, right? So anybody have any experiences with that or any surprises? No? Okay. All right. Well, thanks for coming, everybody. It looks like we're going to wrap a minute or two early. I hope this has been valuable. I really liked I liked your comment about this, the letter to the CRA. I'm totally going to use that. And that is something that like that is something that I think it will help with those conversations a lot. Yeah.
All right.
I do have to, I was just gonna, one thing I have to say, and I learned this is of late, I've been getting some phone calls from CRA asking questions about old clients, you know, because I'm on the represent a client. And so I no longer do the books for that company. So I was able to actually, at the last conversation, talk with the lady of how do I get myself removed from the represent a client, because once upon a time only the client can do it and they're not doing it, but I shouldn't be on there because I'm not doing their books anymore. Anyways, she very graciously was able to help me and removed a few of them, because then I'm not getting the phone calls. And same with on the ROE web access where people are calling about payroll stuff. So,
you know, I never thought about the ROE web situation, but when I went from sole prop to corporation, that was something that I had to do, is go through and I mean, you can do it all online. It takes you a while when you're removing hundreds of people from an account, right? So,
yeah. No, but it was beneficial even on that, because I said, you know, these companies aren't even in business anymore. Some of them, you know, they're on there, been doing books for 25 years. So, you know, some people, and she's, yeah, no, she totally could help me get rid of all those. So it was good. We
excellent.
weeded out a few.
Good.
I'm finding it a hard time adding new business clients. They hate logging into the CRA account. It's like they're
Yeah.
allergic to it. I can't get anyone to do it. I'm waiting on this one client now. And it's like, just I don't, you know, they've forgotten the password. They're scared to log in. I don't understand what the issue is. But I can't get authorized now to these clients.
Yeah,
because
I have one too I've been dealing with since September, and literally had sent me all the stuff. We did the whole thing, wasn't going through. It wasn't until like last month. I finally said, send me a whole picture, because she was just sending me, you know, here you have authorization. But when I would call Sierra, I said, well, you don't have authorization. Anyways, it turned out they had authorized me, even though I sent them the proper paperwork on their incorporated company, they went and authorized me under their sole prop. So now we had to start all over again. And then they couldn't get access to their business CRA business account for their incorporated, because of course couldn't remember the passwords. They had to call CRA. Now they're waiting for the thing. And so here we are now, another month down the road. So all that paperwork that we resent is now moot because it's beyond the 10 days. And waiting for them now to get the code in the mail so that they can get access to start it all over again.
So we have another challenging situation getting approved on CRA for my business now. We are over time, so people have to drop
Okay.
off. By all means, drop off. But
Yes, and
I-
as people are dropping off, we just want to say thank you to Jonathan.
thank you.
Thank you, Jonathan.